banks predicting it could hit 58% by the end of the year. Adam Samson's with the FT's Turkey correspondent. He's in Ankara. Adam, is this, let's be clear and blunt, these new deputy governors, a more orthodox monetary policy, is this a reversal by President Erdogan?
Yeah, absolutely. So there's been a pretty extraordinary reversal in economic policy over the past sort of 2 months. And what we saw today is sort of just the latest extension of that. The three deputies that were appointed at the central bank are seen by investors as very credible. Like you said, one of them used to work at the New York Federal Reserve. One of them was a senior economist at a very large Turkish bank. They all have very, very strong economic backgrounds. So it's a really significant shift in filling up this institution with people who have very, very strong pedigrees.
Okay, but is there any indication that President Erdogan has fundamentally shifted from his position that lower interest rates would bring down inflation?
I think that's one of the biggest questions that economists and investors have. For sure, the central bank has already more than doubled interest rates actually over the past 2 months. That's a big shift for a president who has said repeatedly that high interest rates are the mother and father of all evil, who has pushed back strongly against them. So it's certainly seen as a positive step, but investors are very, very concerned as to whether he's really going to stick with this new policy. In the past, in 2021, he sacked a central bank governor who began raising interest rates.
Adam, how much of this is a reflection not of economic reality, but of the reality that he's been re-elected? Therefore, there is a window of opportunity for conventional economics to bring down inflation without having to worry about paying an electoral price.
Yeah, I mean, the timing is certainly very, very interesting. President Erdogan was re-elected in May. To me, I think he's basically been forced to confront the economic reality. Inflation is running at 38%. It's probably going to get a lot higher. They're very close to a balance of payments crisis. So I think he sort of knew that he had to do something, even if he didn't really want to. But something that's really important, I think, to highlight is there's local elections coming up early next year. And I think that's why people are so concerned about whether he's going to stick with this path, given that it's going to be painful to put in place.
And this idea of a debt crisis, which has been simmering for some time, there's also the suggestion he's literally running out of places to go to basically fund both fiscal deficit and trade deficit. The Gulf is starting to wear it's a bit thin. Russia is no longer as available as it was. He's running out of people to bankroll him.
Definitely. Before the election, that was certainly the case. I think the good news now is investors are warming a bit to this new economic policy. President Erdogan was in the Gulf, he was in Saudi Arabia and the United Arab Emirates last week, and he did secure some new investment commitments. And there's been some signs that investors are starting to just nibble just a little bit on the market now. I think because he's put a new central bank governor in and also a new finance minister, someone named Mehmet Şimşek, who's very, very, very highly regarded among foreign investors.
Adam, we'll talk more about it. Very grateful for your time this Friday evening, joining us from Turkey. Thank you, sir.